and welcome to the weekly market update. So first, we are going to start by the coronavirus updates and then highlight the key economic events and indicators for the coming week, and then go over some of the major charts. I can see some hands up before starting, so if you have any question, just write it down before we start. So first, the COVID-19 confirmed cases are closing into 8 million. The recoveries are around 3.8 million, which is approximately 47%, which is also a good percentage relative to the previous data, while deaths are at 434,000. We are currently facing a rebound in numbers in the United States, which was a good driver for the market in the past couple of days, especially on Thursday and Friday. We witnessed some sharp sell-offs in US equities, and they continued a little bit during today's Asian session as investors are afraid of a second wave of coronavirus. So as we said, the rebound in numbers, they are triggering fears of resurgence. The total confirmed cases and new hospitalized cases rose significantly over the past couple of days. The total US confirmed cases surpassed 2 million. Meanwhile, Brazil is still suffering with the first wave, having the second highest number of infections and deaths behind the United States. Also today in Beijing, the authorities tightened the lockdown measures following the discovery of new cases, around 45 cases. Where health officials also they warned that the probabilities of a second outbreak are high and significant. Meanwhile, in Europe, countries continue to ease down restrictions and life is almost back to normal. So now we're gonna move to highlight or pinpoint the top economic events for the week. It is a busy week ahead, so make sure you keep up with the latest data that might help you in your trading. So first, tomorrow we start early with the minutes of the last monetary policy meeting of the Reserve Bank of Australia. Then we have the Bank of Japan monetary policy meeting. There were reports last week stating that the bank is not considering any changes to current policy. Moving to the European session, the United Kingdom will report the jobs figures of April, where earnings index is estimated to have risen by 1.4% in April, and unemployment rate jumped to 4.7% versus a prior reading of 3.9%. Meanwhile, also in May, the claimant count changed expectations of a rise by 400,000, a little bit less. It's a way less than the previous reading of 856,500. So still, the claims are rising, but at a much slower pace as the economy is going back to activity. Then the final reading of the German Consumer Price Index will month-over-month reading could show a drop in prices by 0.1%. Then the ZEW economic sentiment for June, a slight rebound, a jump to 60 from 51 expected. This could show a little bit of improvement in sentiment as activity is back to normal in European countries and especially in Germany, which could support the economy in picking up faster than in other countries. So these are good indicators to follow up in order to know the sentiment in the Eurozone region. Moving to the United States retail sales month over month for May, also an expansion of 8% as stores reopened during the second half of May. So this could show some positivity after a sharp decline of 16.4% in April. The US industrial production also rise to 2.8% versus a prior contraction of 11.2%, and business inventories also to drop by 0.8%, which is also considered a good reading. Dropping business inventories are always good for the economy. So mainly indicators or economic indicators from the United States, they are expected to be a little bit positive as things start to get back to normal. One of the most important events of the day would be the semi-annual monetary policy testimony for Jerome Powell before the Senate Banking Committee. Any headlines about the future of the monetary policy in the United States? So any talks about maybe further easing if things weren't picking up easily. So this could have a little bit of an impact on the market. So stay tuned for what Jerome Powell has to say on Tuesday. Also, he has another testimony on Wednesday. We'll talk about it in a bit. So moving to Wednesday, we start with inflation figures from the United Kingdom. The consumer price index is expected to show a drop by 0.1% month over month in May. Producer price index also input month over month change in May expected to rise by 4.5%. The final reading of the Eurozone Consumer Price Index month-on-month declined by 0.1%, similar to the one of Germany. Moving to the United States, housing data, building permits expected to rise 1.225 million from 1.066 million previously. Housing starts also 1.09 million from 0.891 million previously. The consumer price index from Canada also month over month in May, expectations of a rise by 0.7% versus a prior drop of 0.7% in April. The weekly oil report by U.S. Energy Information Administration, expectation of a drop by 1.738 million barrels, where inventories reached last week a record 538 million. So also this is a good indicator to monitor for those who trade oil. And the second day testimony for Jerome Powell before the House of Representatives Financial Services Committee. So this is for Wednesday. Also, we end the day with the final reading of the first quarter GDP from New Zealand, expectations to show a contraction by 1%. So this is for Wednesday. Moving to Thursday, we start early with the Australian jobs figures. Employment change expected to drop by 125,000 and unemployment rate to jump to 7% from 6.2%. Also, the Swiss National Bank will have its monetary policy meeting. There are no expectations for any change in policy. However, the bank could reconfirm again that the Swiss franc remains highly overvalued and that they are ready to act further or even interfere in the FX market in order to reach their targets. The ECB also released the Economic Bulletin, which has the statistical data that the ECB takes into consideration when deciding on policy. So this could be could have a little bit also could give you a little bit of an insight on the performance of the Eurozone economy. However, after the latest changes in policy from the European Central Bank, there are no expectations for any changes in the coming meetings. One of the most important events of the week is also the Bank of England monetary policy meeting. The bank is widely expected to keep interest rates unchanged at 0.1%, but the quantitative easing could be increased by an additional 100 billion pounds, especially after the catastrophic reading of the April GDP, which showed a contraction of almost 20% in the economy during April. So this could force the Bank of England to apply further stimulus in order to support a faster recovery. After the Bank of England decision, we have the weekly jobless claims from the United States rise by 1.295 million is expected, the least almost since the outbreak, and the Philly Fed Manufacturing Index, a reading of -25 expected versus a prior reading of -43. On Friday, it's a little bit calmer. So we begin with the Australian retail sales figures. Also, the retail sales figures from the United Kingdom month over month in May, expectations of a rise by 5.7% versus a contraction of 18.1% back in April. The German producer price index also a drop in prices by 0.3%. Retail sales from Canada, a contraction for April, a contraction by 15.1%. Also, Federal Reserve Chairman Jerome Powell will be participating in a virtual panel discussion about building a strong workforce during the COVID-19 era. So any comments about the labor market or how to tackle the latest unemployment could also have an impact on the market. And we end the week with the Baker Hughes oil rig count, which continued to show a drop in rig count despite surge in prices. So it was 206, it dropped to 199 during the last week reading, but the drop was very minimal compared to prior readings. So also this could have a little bit of information for those who trade oil. So this is for the economic calendar for the week. Now we're moving to the MetaTrader 4 to talk about some of the major currency pairs. So mainly let's have a little bit of a summary about the performance of the market lately. So we had the risk on, the risk off trades. While the market is going for high risk, investors' risk appetite is improving. They are favoring riskier currencies such as the commodity currencies, Australian dollar, New Zealand dollar, Canadian dollar, euro, and then the pound. And the dollar and Japanese yen and Swiss franc are on the defensive. While when we are witnessing a drop in risk sentiment, a drop in risk appetite like the one that happened a couple of days ago, witnessed the dollar regain strength. Also, the Japanese yen was firmer against currencies, and the euro and the pound eased a little bit, lost some of their gains, while the worst performers were the commodity currencies such as the Australian dollar, New Zealand, and the Canadian dollar. So this is the bigger picture. This is how the market is trading recently relative to the sentiment, the risk sentiment in the market. So let's start with the euro dollar. We can see here that the market had a strong rally during the second half of May until the first half of last week, when we started having some news that there is a second wave in the United States, and this triggered some sell-off in equities. We witnessed their investors are rushing back to safe currencies such as the dollar. So the dollar gained strength against the euro, and we saw the euro dropping. If we have a closer look with some of the the technical indicators, you can see that here that we had a divergence on the RSI on the daily chart, and this key level was broken, and now the market is trading back near this level. So we had a reversal towards 38.2 retracement, and currently we are moving back upward as the market is recovering from last week's losses. We're seeing a rally in stocks, and this is also being positive for riskier currencies such as the euro, pound, and commodity currencies, just as we were saying a while ago. So one of the key points to look out for would be the 23.6 retracement of this level, which is 1.1290. It's very it would be a little bit of bullish if we were able to close above it on the daily time frame. And for resistance levels, we have to look out for the prior high of 1384, and then again for a major resistance at 1420. These are the key levels if you're trading the euro on the upside. So you have to look out for any break above 112.95, 113, and also take into consideration the resistance level of 1380, and again at 1420. On the support side, we have to watch out for any break below the 38.2 retracements, which was the low on Friday, almost 1210, and again the 61.8, which is around 1080. So these are the two key levels, the two support levels that could play in the market during this week if we witness some further selling on the euro dollar. So these are the key levels. If you are trading the euro dollar, you have to keep them in mind. They are marked here. So 1290 is a good pivot point. At 1380, the first resistance, the second resistance at 1420, and then the previous high of 1492, and support zone could come in at 1210 and again at 1080. So this is the structure if you are trading the euro dollar. Moving to pound. So moving to pound also, we witnessed a rally, and then also a huge reversal or drop on Thursday and Friday, almost 50% of the retracement. And currently we're trading near the 100 and 200-day exponential moving average, awaiting some fresh clarity too. So if you are able to close above the previous resistance zones of 2640, this could be a little bit bullish to the market. So we need to close above 2640 to return to somewhat a bullish move, and then the key resistance level could come in at the previous high of 28.10 for the British pound, and a minor resistance could be the previous lows of 27.25 could turn into a resistance while we are recovering back. So you have these three levels if you are trading the British pound on the upside against the United States dollar, whereas for the support you have to look out for the low of 24.43, today's low, and again towards 22.90, which could also be a major support if the market continues to go down or goes down ahead of the Bank of England. So I would like to remind you that we have a series of indicators to come out from the United Kingdom this week, among them the inflation figures, jobs report, jobs figures, and also the Bank of England monetary policy and the retail sales. So also we have like 4 catalysts in the market for any move upside or downside. So this is for the pound, the dollar. Moving to the dollar yen, which was moving lower, significantly lower during the past week, and we had a little bit of a correction here. So we're currently trading near almost the 38.2 of 23.6 and 38.2 levels of the latest swing lower. So we need to break above the 108 level, which was here a clear resistance, in order to move back higher. So here the market was capped at 108 for a long time. So we need a break above 108, 108.10 for a further move upside. We have a minor resistance at 109.40 and the key resistance at the previous high of 109.87. This is for the dollar yen if you're trading it to the upside. Also, in terms of support, you have to monitor the previous low of 105.98, which is a little bit far and needs a little bit of faster catalysts in the market in order to be reached. And one of the minor supports could be here at the recent low, which is around 106.60. So these are the key levels if you are trading the dollar yen. From the upside, 108, 108.10, and then the area between 109.40 and 109.87. And from the bottom, we have support at 106.60 and again at 105.98, 106 level. These are the key levels if you are trading the dollar yen. Moving to commodity currencies, the Australian dollar, which had a pretty good rally among other currencies during the past couple of weeks, and then here we're witnessing a little bit of a recovery, a clear recovery. So if we are expecting a retracement for the full move higher, the price could find some support near the 23.6 level, which is at 66.90 almost, and then the 38.2 retracement, which comes in at around 64.90, so 64.60, excuse me. So these are the two key support zones if you are trading the Australian dollar, and the key resistance area continues to be the previous high around 70.70. So this is for the Australian dollar. If you're trading the Australian dollar, we're currently trading near the 20-day simple moving average, which was the middle band of the Bollinger Band. We are seeing also the bands are closing in to each other after being diverged following this sharp move. So maybe we can see some sideways movement here for the Australian dollar ahead, or awaiting some fresh fundamental drivers. Be aware that the Australian dollar is being too sensitive to risk, so any headlines that could affect the risk sentiment could weigh on the Australian dollar or lead to further gains. So this is for the Aussie. Moving to the New Zealand dollar, also same aspect for the New Zealand dollar, similar to the Australian dollar. We had this rally, and then here also a little bit of a correction. So if you are expecting a correction for the full move, also we have to look out for support near the 23.6 Fibonacci retracement, which comes in at 63.25, and again at the 38.2 retracement, which comes in at 61.65. And in terms of resistance, the previous high for the current high of 65.87. So these are the key levels if you are trading the New Zealand dollar against the United States dollar. If you can see, the RSI was overbought, was showing overbought signals, and then dipped towards the 60 level, and currently we are trading near this level. So also any risk drivers could lead to a move and the New Zealand dollar. If we have a closer look on the hourly chart, you can see here there's a sideways move. Also, the prices are being capped by the 100-hour exponential moving average. So watch out for a breakout from this consolidation zone for any move, either to the upside. We have to break above this minor resistance of 64.70, and from the bottom this minor support at 63.80. So that we are trading inside this consolidation range. Watch out for any break above or below these levels. Moving to the Canadian dollar, the USD against the CAD, also similar to the USD, similar to the Australian dollar and New Zealand dollar. There are commodity currencies, they are moving almost in the same manner. We had a trade down, and then the market recovered, and currently we found support near the 200-hour exponential moving average. We are trading in a consolidation zone also here. If you can see, Bollinger Bands are closer to each other, and the moving averages are a little bit smooth, and the slope is almost steady. So watch out for any break above the previous high here, the interim high of 36.90, and below the support of 35.26. This is on the smaller picture. If we want to look for a bigger picture, we can see that the market was consolidating here, and then we witnessed this drop and then this reversal. So watch out for any break above 38.50 to turn into the positive territory. Also, we have this trend line here, which could coincide with the 100-day exponential moving average. So watch out for the play in the coming days. Watch out for any break above this trend line, which could signal some positivity in the pair. So this is for the USD against the CAD. Moving to gold, we're trading on the bigger picture. We're trading in a big consolidation zone started since April. So we're finding support near levels of 1670 and resistance near the previous high of almost 1740. So we are trading inside these two levels for a while. Watch out for any break above or below above 1745 and below 1670. Maybe we need some good catalysts to be in play in order to move lower. Maybe if we can break below the 1670, we can move towards the 200-day exponential moving average, which currently sits at 1608. Maybe in the future it can rise a little bit towards 1640, which could coincide also with the previous low. So this is for gold. We're currently in a neutral phase, trading almost near the middle level of this consolidation zone, so almost around 1705. So watch out for any break. And gold, if we can see also the hourly chart here, we can see a steep move in the morning, and then we started seeing a little bit of a recovery here. Maybe we could witness some resistance near the 100 and 200-hour exponential moving average, which are currently sitting at 1717 and 1723. So watch out also for this area. If we break above this area, maybe we could retest the highs of 1740. And if the correction was capped here, we could retest the low of 1705. This is for gold. Silver also similar to gold. We're also inside the bigger consolidation zone, but a little bit weaker. The silver was a little bit weaker. If you can see it here. So here we have like similar to head and shoulder pattern, but it's still not really valid pattern. We had a little bit of a break here, but there wasn't a good volume for the break, so it's not a valid structure. So this is the silver. You can see here the market is moving down, so watch out for any break below the previous low of 1660. And for positivity, we need to break above 1760 in order to retest the previous highs of almost 118, almost 18 and 1840. So this is for silver traders. We'll talk about oil before moving to the Dow Jones. So this is the July futures, which will expire in a couple of days. We started witnessing some correction in prices, especially amid growing talks of another wave, which could also weigh again on demand levels. So watch out for any big correction for the recent move or the recent rally, which could, if we're going to correct for all the movement for the July contract, we could find some support near the previous zone here. So watch out for the 3070. We are currently sitting near the previous resistance, which is currently acting as the support near 3470. So this is a key area. If we break below, maybe we could retest the 3070. This is on the downside, and on the upside, we need to definitely clear above 3830 to move towards the 40 levels. This is if you are trading oil. So these are the key levels for oil. Any break below 3470 could trigger a sharp move lower towards 31, and any correction towards 3815 and break above it could retest the highs of 4030. The prices were affected recently sharply by the assumptions or expectations of a second round. So also watch out for the headlines. Moving to Dow Jones, a steep decline last week, one of the steepest declines since March due to the talks of having a second wave or coronavirus cases rising for implying maybe we could be facing a second wave. So this is for the Dow Jones. We have here this key support area, which was previously resistance. So here it capped the rise in prices for 2 times near 24,600, 24,700, and currently it acted as the support level. So watch out for any break below this, which could trigger further downside, maybe towards the 22,800, which was clear support on the H4 time frame. So this is for if you are looking to short the Dow Jones, you better watch out for these 2 levels. And on the contrary, any reversal or any trade back above 25,800, which was previously here resistance, and here also it acted as a resistance when the market was recovering slightly from the drop. So any break above 25,800 could lead to higher move towards 26,600, maybe retest the highs of 27 if the risk appetite goes back to normal, where it was ahead of these headlines that stated the cases are surging again in the United States. So this is for Dow Jones. This is what we have to say today. on the major chart. So if you have anything to ask, kindly write them down so we can answer the questions. I would just like to remind you that all the information mentioned in this webinar are just for educational purposes and shouldn't be taken as a signal whether to buy or to sell a financial instrument, and ICM doesn't provide any investment advice. So if you have any questions, please write them down. I'd just like to remind you that all the opinions, analysis, news, and information mentioned in this webinar only serve for educational purposes and shouldn't be taken as signal whether to buy or to sell a certain financial instrument. ICM doesn't provide any investment advice. So if you have any questions, write them down so we can answer them. Okay, sir, there is a question: how do we learn the effect of each of the events going on this week? So mainly, beside each of the indicators on the economic calendar, you can see that there is a volatility meter, but mainly those that we highlighted today, they are among the top indicators. So either currently central banks are looking for any developments in the labor markets or any numbers for the labor markets, which will come out this week. Also, the inflation figures, which would have the central banks move towards reaching a certain price stability, and also the economic activity, which also could be could have some information coming out from the retail sales figures. So all the economic events that we highlighted today, they are among the top movers in the market and will have like a pretty good impact on the market. So any labor data, inflation data, retail sales figures, and central bank policies, also they all have impact on the market, should have an impact on the market. We mentioned this during the webinar related to fundamental analysis. So always you have to make sure to follow up the indicators that they are the most important relative to the central bank during the current financial conditions. So these are usually they usually have the most impact, since they could lead to any changes in monetary policy of the current central bank. Usually this saying, they say it like sell in the beginning of May, and then they expect a drop in May and maybe the later stage or the early stage of the third quarter. However, this doesn't have to always be right. It's we witnessed a good rally in equities during May, so it always depends on the current market conditions and not on these seasonalities. Okay, perfect. So on Wednesday, we are having an educational webinar about the MetaTrader 4 platform. So it's a platform walkthrough. We will also be explaining how to deal with different charts and also how to deal with your automated trading system and how to backtest it using the MetaTrader 4 platform. So this is for Wednesday educational webinar. If you have any further questions, please, you can write an email to webinar@icm.com or support@icm.com, and we will be glad to support you. So this is all for today. Thank you all for joining, and hopefully we'll be also in contact on Wednesday educational webinar.